Good morning. I'm Josh Lipsky, the Senior Director of the Atlantic Council's Geoeconomics Center. And it is my pleasure to welcome everyone here in Washington and watching all over the world for today's event on the next generation of international payments. Now that's the title of our event, but I want to focus on the subtitle, Faster, Cheaper, Safer. Now I wish we could say that we thought of this at the Atlantic Council, but it actually comes from Secretary Yellen. Almost exactly 2 years ago to the day, Secretary Yellen was doing an interview with the New York Times and was asked about the Atlantic Council's central bank digital currency tracker. At the time, 40 countries were exploring a CBDC. She said that it was possible CBDCs could help create a system that was faster, cheaper, and safer. And in that comment, she got to the heart of the issue we are going to discuss today. As you will hear in our event, there are significant frictions in the international payment systems, often overlooked. Settlements that could take seconds, sometimes take days. Remittances end up costing both the sender and receiver far more than they need to. And through these frictions, a massive amount of money is needlessly lost. Now, new technology enables us to think differently, not just about currency, but just as importantly, about the rails currency travels on. Central banks and the private sector understand this. Today, there's a wide array of new ideas being put out there. From CBDCs, there are now over 100 projects that we look at in our tracker, to better real-time payment systems. These are not just technical issues, they are policy debates as well. And all of these ideas are worthy of discussion. We will continue to focus on them at the Atlantic Council, because building a more resilient global economy and ensuring U.S. leadership in the international financial system for the decade ahead is what animates our work at the Geoeconomics Center. Now that is why I am so excited we have assembled this all-star group to discuss the topic today and hopefully outline a way forward that can truly deliver on faster, cheaper, safer. It is now my pleasure to turn the floor over to Ananya Kumar, Associate Director for Digital Currency at the Atlantic Council, to moderate today's event. Ananya, over to you.
Thank you, Josh, and thank you all for joining us today. My name is Ananya Kumar. I'm the Associate Director of the Geoeconomics Center at the Atlantic Council. As Josh said, 2023 is shaping up to be a critical year in payments infrastructure. We look at more than 100 countries that are developing CBDC projects, actively involved in them, and many of these projects are cross-border as well. The United States is rolling out its FedNow project, which is an instant payments network being rolled out for the first time this year in the United States. On top of it, current traditional payment players are improving their platforms, responding to new technological changes and new players in the field as well. At the crux of this are important economic functions, those of trade settlements, monetary policy provision, remittance payments, global economic governance, and the future role of the dollar. Today's panel is focused on these questions and more. We're going to look at the next generation evolution of payments infrastructure, what it's going to look like, what it's going to achieve, and how we're going to get there. To do this, I'm joined by a great panel consisting of Nick Kerrigan, who's the Head of Innovation and Execution at SWIFT, Federico Grinberg, economist at the Monetary and Capital Markets Department at the International Monetary Fund, Jesse McWaters, Senior Vice President and Global Head of Regulatory Advocacy at MasterCard, and Nasreen Kibriya, Senior Director and Head of Cross-Border Policy Engagement at Visa. Thank you all for joining us today. I want to start off with the first question of something I receive all the time when I go to events like this, which is that CBDCs and other technological evolutions are a solution in search of the problem. I want to talk a little bit about what problems we're talking about. And Jesse, my first question is to you. What do you see as the main pain points of today's payment system that these next generation solutions are targeting?
So I think, Ananya, first, thanks so much for having me. Really delighted to get to be here. I think that anyone who thinks that there aren't problems in the cross-border payment space clearly isn't making a lot of cross-border payments. And I think that the G20's cross-border payment roadmap, been supported by the Committee for Payments and Market Infrastructure of the BIS, as well as the Financial Stability Board, has done a really phenomenal job of identifying the core areas that need to be approved. There's an obvious need for cross-border payments to be faster, cheaper, easier to track, more accessible. The difficult question in my mind isn't what, but how. And again here, I think the FSB and the CPMI and the other agencies supporting the G20 roadmap have done great work. If you read their diagnosis of the problem and the resulting 19 building blocks that have framed the last 3 years of work on the G20 roadmap, what you'll see is a strong focus on harmonizing regulatory frameworks, aligning operational practices, and experimenting with new technologies, including CBDCs, but also the linking of real-time payment systems in ways that I think over the next 5 to 6 years could fundamentally transform the speed, the efficiency, and the traceability of cross-border payments. It's all very exciting. Personally, I'm very optimistic, but as someone who spent the last 3 years really immersed in this process and this topic, I think there's also a sort of a point of caution that I'd like to raise around particularly new technologies. Because when I listen to some folks, well-intentioned, talking about this, I think there can sometimes be a sense that new technology is a panacea that allows us to skip over much of the less sexy, but still fundamentally important work of navigating things like conflicting regulatory frameworks, conflicting data privacy and protection frameworks that inhibit straight-through processing in cross-border payments, lack of harmonization in messaging systems. Ultimately, and I think this is something we've seen the CPMI and the FSB agree with, purpose-built new cross-border infrastructure will only be successfully transformative if significant progress can be made on these dollar issues. And that's why, for me, I think that the most important ingredient in transforming cross-border payments isn't actually flashy new technology. It's the sort of dull as dishwater sort of concept of public-private collaboration. Next generation cross-border payments, to my mind, are only going to be able to achieve their full potential where the political will exists to drive things like the alignment of regulatory, supervisory, and oversight frameworks, and to make investments in things like expanded RTGS operating hours, and in finding ways to reconcile conflicting structures of cross-border data transfer frameworks. Not as exciting as flashy new tech, but I think ultimately the core foundation to making genuine progress in this space.
Thank you, Jesse. And a great point there about cautious optimism and not viewing technology as a silver bullet. Federico, I have the same question for you. What do you see as the main problems in our system, and what is the IMF's role in these?
Thank you so much. An absolute pleasure to be here with all these fantastic panelists. So I fully agree with Jesse on all his points. I think that fundamentally, this is just a more complicated problem than what we face in domestic payments. So it's not just about finding ways to make the private sector to innovate in ways that are sustainable and safe, and have the public sector to oversee, regulate, and provide a settlement asset for transactions, but also to make different governments, different countries to agree on how to do this. So this is a very complicated problem, as Jesse said, because there's no supranational entity that can make these decisions for other countries. So at the IMF and together with the BIS, FSB, World Bank, and others, we've been working very hard, as Jesse said, to try to tackle these problems, to see, to make stock takes and see what we can do. I do think that new technologies can be not a solution, but a catalyst to find new ways to collaborate and open opportunities for private and different public sectors to work together to improve cross-border payments.
Thank you, Federico. And I like your point about viewing new technologies as catalysts. Nasreed, I want to ask sort of the second order question here, and kind of the obvious one. Well, we've focused a lot on the subtitle, faster, cheaper, and safer payments infrastructure. What progress have we made so far? I just really want to talk a little bit about where we are in this current moment.
Well, first of all, thank you for inviting me to speak with such a distinguished group of panelists. Jesse and Federico already provided some thoughtful discussion around cross-border payments and the frictions, as well as Ananya, you've already also raised a very important point, which is what progress have we already made? And if you look around the globe today, there are between 65 and 70 countries that have modernized their domestic payment market infrastructures with faster or real-time or instantaneous payments. Ananya, you mentioned the FedNow launch that's going to happen very shortly. And so some countries, the early movers, they're already now upgrading those upgrades. And we're at an inflection point where there's reasonable to consider connecting those systems. In fact, just yesterday, and I'm thrilled, Federico, you're on this panel because I saw the publication from the Bank for International Settlement in collaboration with the IMF and the World Bank on the new multilateral platforms paper. So it'll be wonderful to hear your insights about that. But while we're observing some newer projects and experimentation led by BIA's Innovation Hub, experimenting with interlinking systems, and generally, though, the public sector has made significant strides when it comes to modernizing the domestic infrastructures, but it has lagged behind on the cross-border front. On the other hand, I want to point out that private sector firms like Visa have been building out and updating global capabilities for decades. So not only have my Visa colleagues been expanding the reach of VisaNet, that's our global network, they've been connecting it to other networks, a network of networks. And the result is that Visa Direct, what we call our retail money movement capability, now reaches 7 billion cards, accounts, digital wallets across 200 countries and in 160 currencies. And all of this reach happens via endpoints connecting to a multitude of not only card-based networks, but 65 domestic ACH schemes, 11 RTP networks, and 5 payment gateways. Now, someone who's been in the payment space for nearly 2 decades, that's a very impressive interoperability story. So to come back to the original question around next generation of payments and progression, we at Visa, we're continuing to expand the reach and usefulness of our global network, and we welcome the public sector initiatives, and we believe we can support them through services and capabilities with public-private sector collaboration that Jesse's alluded to a few times now.
Thank you, Nasreen, and you brought up a lot of interesting points here. First about the BIS Innovation Hub, which is really serving as a hub for a lot of CBDC experiments, especially cross-border CBDC experiments in the wholesale space. You also bring up the point about public and private networks. Payment networks have always relied on public and private infrastructure working coherently at the same time. No one knows that better than SWIFT, which relies on its huge network to conduct messaging services across the world. So, Nick, I really want to turn to you and ask you the same question of the state of play currently. Where are we now, so that we can sort of envision the next step from here?
Thank you. And first of all, I wanted to say I'm also delighted to be on this panel with the Atlantic Council. The Atlantic Council has been doing, pioneering work in the CBDC space, and so it's great to be a part of this. I think when it comes to cross-border payments, I'm also a real optimist. Because actually we've seen quite some progress in the last few years, and cross-border payments are getting faster and getting towards greater certainty. As you might know, SWIFT, together with the 11,500 banks and corporates that are connected to the SWIFT network, has been driving the GPI initiative over the last few years. And what you see as we look at the data that we get from GPI is actually, some quite material speeding up of cross-border payments. So today, 47% of payments made via SWIFT GPI are credited to end beneficiaries within 5 minutes. Right, that's almost half of those payments credited in 5 minutes, and then you see over 60% within 30 minutes, 80% within 6 hours, and almost 100% within 24 hours, with the transparency and predictability that initiative brings. So, for example, the tracker that comes with GPI enables you to see the progress of a payment, much like your Amazon parcel, right? You know where it is at every stage. So I think that initiative, amongst a number of others that Jesse and Federico and Nazreen have mentioned, are actually really material steps that I think gives me confidence, because it means that the public sector and the private sector and SWIFT, that exists as as an international cooperative to help this process move forward, can actually come together and can actually deliver real value and real progress, when we work together. In a similar vein, we've been also kind of expanding, the capabilities that the community can offer around lower value payments. And so the SWIFT Go initiative that we've initiated now has over 600 banks signed up to it, covering 130 countries, and 73 of those banks are now live on SWIFT Go. And what that does is, again, give speed and predictability to those payments, which I think is critically important if you're a consumer or small business in this space. Obviously, there's still a way to go, and this this is why I'm in my role as head of innovation at SWIFT, is actually to continue pushing those those initiatives forward. Our vision is one of instant and frictionless cross-border payments, and I think we're on that journey. Obviously, cross-border is more complex than domestic because of the jurisdictional complexity and the regulatory complexity. But I think concerted effort driven internationally can deliver real benefits.
Thank you, Nick. And really important points here, honing in on our subtitle, again, of speed, cost, and transparency, really the crux of the next generation of innovations, but also jurisdictional issues. And we're talking a lot about interlinking networks. And Federico, your team at the IMF is working on a multilateral exchange and contracting platform, obviously interacting with a lot of central banks and commercial banks interested in this. Now, that sounds like a lot of words, but I want you to, in plain English, explain to me, what is the use case for a central bank or a commercial bank for this network? And what is the role of your organization, the IMF, in the payments infrastructure world?
Thank you. Thank you so much. So first, let me clarify that this is not something that the IMF is building, but that we get a lot of questions from our membership when we deliver our technical assistance on payments and other issues. So what we aim to do in the paper that we published last November, also related to Building Block 17, published yesterday, was to get our heads around on how we could design a multilateral platform that could potentially leverage new technologies to improve cross-border payments. So, of course, we're not in this initial paper, we're not thinking on how to align regulatory frameworks or deal with these very hard problems that all the other panelists were flagging. But we were trying to think on what new technologies can bring to a new multilateral platform. And I could break it down in 4 components. First, the provision of central bank money for settlement. And you'd like each participating country in a platform to have its own money represented there. The other 3 components are related to technology and what technology can bring to solve cross-border payments issues. First, a common ledger. this allows for more transparency and synchronizing accounts, if you want, in these different monies. Smart contracts and programmability. This is more than just automating how payment is done and when it's done, but also delegating functions now done by entities where trust has to be put into them. This delegation can potentially help automate processes, but also make participants more comfortable and more safe. And the last component is encryption. We see OTC markets to be very large, and many participants not wanted to engage in exchanges where they may reveal the positions, or other participants can infer the balance sheets. Encryption can play a role in allowing exchanges and centralized venues for FX markets, for instance, or derivatives markets, to be developed in ways that are safer for participants in terms of not revealing their positions. So altogether, there will be a role for the public sector in designing architectures for new platforms, ensuring interoperability, ensuring efficiency, safety, avoiding walled gardens, but also for the private sector, because the private sector is the one that knows what types of contracts are needed, for instance, to hedge FX risks, but also how to apply new technologies, how to develop sustainable business cases, and then also ensure adoption and usage. Thank you so much.
Thank you.
Ananya, I wonder if I can jump in here, because this is an area, this area of interlinking is an area that we've been working on a lot at MasterCard. We're best known as being an international card payment network, but as some of your listeners will know, we also operate real-time payment systems, the domestic real-time payment infrastructure in more than a dozen markets around the world, as well as operating, or rather providing the software for even more of those. And so we've been experimenting for several years now with thinking about how we can establish linkages between those real-time payment systems, so that in the same way that you are able to initiate and execute a payment in real time at very low cost domestically in markets where those systems are operating, you might be able to do so internationally. And as you can imagine, there are a lot of technical challenges associated with that we're have some fairly brilliant minds working on. But what I want to stress here is that what we have found over and over again in our work on this space, that the biggest challenges that we face is effectively on generating alignment across border on things like the legal and regulatory oversight frameworks. So you have different rules, for example, about settlement finality, netting, and defaults within these different spaces, different expectations around how AML and KYC would be performed. There's a need to align the scheme rules that fundamentally create the framework around those different systems. And critically, and if I'm not mistaken, Federico, something that's important to the work that the IMF is thinking about and the great papers that you've been writing on that, there's also a fundamental need to move forward and to align operating hours of our TGS systems. Because ultimately, these real-time payment systems, these instant payment systems on a domestic basis, are reliant on the underlying RTGS systems in order to be able to deliver true settlement finality in central bank money. And so there's a need to effectively, in order to drive this path forward, to also have the public sector step up and provide the necessary investments in really expanding and aligning those RTGS operating hours, something that obviously has been identified as a priority issue under the G20 cross-border payment roadmap. So just to sort of illustrate a few of the areas in which the technical and the non-technical are intersecting in this space, and where moving both of those forward together is going to be really essential in terms of getting the necessary outputs that we're looking for.
Yeah, and as we're seeing experiments coming out of the BIS, out of other fora, we're seeing two streams of work, right? One is technical experimentation, and the other is how do we align regulatory frameworks, which is just this huge challenge that we keep talking about. But speaking of experiments, Nick, your work at Swift has a lot to do about these things as well. It's a lot about interoperability and interlinking CBDCs and other tokenized assets with each other. I want you to talk a little bit about those experiments themselves, but also the role of your organization in enabling this. Does it view itself as a hub for CBDCs? Does it view itself as a network provider? Just talk a little bit about that, please.
Great, thank you. Yes, I mean, and I think this work around CBDCs was really inspired by some of the insights that we've seen in terms of the growth of CBDCs. As was pointed out at the start of this session, you've got over 100 countries now exploring CBDCs, 10 already live. And if you read the recent OMFIF report, 24% of central banks said they were planning to take a CBDC live in the next 1 to 2 years. Now, if we accept that as a kind of an assumption here that CBDCs are happening, then I think we need to also consider that they're being designed with different use cases, business rules in mind, and also different underlying technologies. Some people associate CBDCs with DLT or blockchain, but as we know, within that term, there's a wide range of underlying technologies that can be supported, and indeed some other kind of initiatives such as Project Hamilton in the US or the Chinese CNY have actually opted for a more centralized architecture. So I think what we will see is quite a diverse landscape of CBDCs evolving, and therefore the kind of the opportunity and challenge that we've looked at solving is how can we actually ensure genuine interoperability between those different diverse domestic CBDCs, and so. What we experimented and published our report on in October last year was a solution around CBDC interlinking that we've developed. And essentially, for those familiar with the BIS terminology in this space, it's a Model 2 solution. In other words, linking the networks at a technical level in order to enable transactions to flow in a more seamless and straight through processing manner. The other feature of this experimental solution is that we think it's quite a scalable solution. In other words, with one connection from a domestic CBDC network, that through the connector gateway that we can provide, that network can then get access to and reach all the other networks, be they CBDC networks or existing payment infrastructures already connected to SWIFT. And we think that's quite a powerful model because it avoids the need for many bilateral connections, which if you have say 100 CBDCs live, you would have to have thousands of bilateral connections, and thousands of bilateral connections would have to be supported, maintained, and upgraded. And so we're looking to provide an efficient and effective solution in this space. Having said that, we knew that in creating this CBDC interlinking solution that we made quite a lot of assumptions because this is very much an evolving space, and there are quite a lot of unknowns to it. So what we did is we then took the solution that we designed and we put it into a sandbox environment. And over the fourth quarter of last year, 18 central and commercial banks joined into that sandbox and started experimenting with the solution and giving very valuable feedback on what they found useful and also equally what we could improve and iterate. And so what we're now is at the stage is having concluded that sandbox exercise, we will be in the next couple of months publishing the results of that and looking to develop the solution that we've initially designed further. And we see this as a really, to be honest, as a collaborative effort here. We want to arrive at something that's that's genuinely useful for the financial community, and that also enables CBDCs to be seamlessly integrated into the space of cross-border payments. I think it would not be a a great outcome if CBDCs result in us generating new digital islands, right? We don't want any further fragmentation of the global financial system. And so by the work that we're doing in collaboration with the community, we want to bring that community further together, and also support central banks in realizing some of the benefits that they're looking to achieve from introducing CBDCs, such as, Jesse mentioned programmability, right? So some of those important benefits that they're looking to achieve, so that with CBDCs, we actually get to the next level of cross-border payments.
Thank you, Nick. And just a follow-up question to this, right? You're laying out this new infrastructure. There's a missing perspective here of smaller, newer fintech players that seem to have an aversion to the kind of centralization that you're talking about, and believe in a vision of payments infrastructure that looks very different from incumbent players, from big IFIs running the system. What is your response to that?
Look, I mean, we're very open to collaborating with fintech players, and we do that in multiple different ways in our innovation efforts. What I would say, though, is we've got to remember that payments is a scaled business, right? And that ultimately solutions that are genuinely successful in payments need to be able to scale, and need to be able to do that in a secure and resilient way. Our expectation as people, right, when we make a cross-border payment, is that it does arrive in a certain amount of time, and that it does arrive, right? It doesn't disappear along the way, and that we know the cost, and we get the transparency of where it is, and so forth. And so I think, I always welcome disruption because I'm an innovator, but equally I want to deliver a solution to the community that actually genuinely works at the high level of scale that payments works today and will continue to grow in the future.
That's an important answer with respect to scalability. Jesse, I want to turn to you. Same question. What do you say to them?
Yeah, look, I'm gonna weigh in on this one, and I'm gonna, in a sense, perhaps be a little bit controversial, because I'm going to disagree at some level with both the sort of the thesis of your argument, both that the existing system is inherently centralized, and that the experimentation that we're seeing around the future is inherently sort of more decentralized. I think if you think about the correspondent banking system, it's actually sort of a remarkably decentralized and in many ways organic system of nostro vostro accounts that, and if you're kind of getting into your economic history, in many ways, you can draw sort of a continuous line back to the invention of double entry bookkeeping in 15th century Venice, right? And banks starting to build an interconnected network of being able to sort of move funds across these many jumps that we continue, unfortunately, to see within the system. And in my view, and Nick, please sort of push back if you think this is wrong, the creation of centralized systems like SWIFT was effectively driven by a desire to simplify things like messaging across that network. Decentralized systems inherently have higher levels of complexity to them, and that drives a degree of centralization as players seek to navigate those complexities and to achieve the scale benefits that Nick is talking about. And on the other hand, I think there's also a sense in which much of the very welcome innovation that we're seeing in and around cross-border payments is not inherently more decentralized than what we have today. Players like Wise, formerly TransferWise, are effectively finding new ways of driving efficiencies by creating layers that exist on top of the existing system, but find ways of making it more efficient for particular use cases. I would argue, and I'm sure many would disagree with me, that stablecoin arrangements today fundamentally share a lot of characteristics with closed loop payment arrangements. They obviously rely on a different technological foundation, but functionally they have similarities to systems like PayPal and Alipay in that they're very efficient when you're operating within that system across borders. But as soon as you start to need to move outside of it, for example, to take those funds out into the banking system, you start to see greater barriers and increased sort of time and cost and complexity. And more than anything, I would suggest that many of the platforms that we're talking about, such as the work envisioned by the BIS Innovation Hub and Project Dunbar, are arguably more centralized than the system that we have today, because they would centralize both messaging and the ultimate settlement of cross-border payments on a common platform. At the end of the day, sort of there's a bit of a geeky dissection of cross-border payments. But at the end of the day, my view is that neither decentralization nor centralization are inherently virtuous. What we're really looking for is speed, efficiency, and security. And at the end of the day, I think what we've seen is that there's a tendency for players to gravitate towards centralized solutions as a means of navigating complexity in decentralized systems, and as a means of providing certainty and trust, particularly during times of instability. And we've seen that, for example, during 2008, and the heavy reliance that banks placed on systems like CLS, continuously linked settlement, that provides a trusted bridge between RTGS systems as a point of infrastructure that would allow them to have confidence that their payments would be settled as promised. And so I think inherently we're always going to have a mix of centralized and decentralized processes that are really trying to gravitate towards these goals. The question is, what's the right mix to put in place in order to get to faster, cheaper, and more secure?
Thanks, Jesse and Nick, and really important perspectives there about not viewing technology for its own sake as a panacea, going back to your main point, but also at the end of the day, the goals of fintech solutions like Alipay, as well as MasterCard and Visa, are the same. It's to provide greater access through better networks and reduce friction. So we're coming back to the same point again and again. I want to move to sort of a very important use case for the next generation evolution of cross-border payments and cross-border payments specifically, which is remittance provision. So the World Bank reports that 1 in 8 people in the world are going to currently rely on remittances, and more. That number is likely to grow in the future. I want to talk about sort of this aspect of remittances and financial inclusion at the same time. So do technological solutions, can they help in this kind of solution providing? And I'll include CBDC in that sort of technological solution bucket as well. Nasreen, I'd love to hear your perspective.
Please. So you raise an excellent point, Ananya. Remittances, and especially with those statistics, they are the lifeblood of certain lower middle income economies, and their significance cannot be underscored. First, let's recognize the importance of digital payments to financial inclusion. While the pandemic was and has been a painful event, it accelerated the digitization of payments, and this includes remittances, which in turn have led to measurable improvements in cost savings and greater efficiency. And this is according to research from my colleagues at the Visa Economic Empowerment Institute, as well as by data highlighted in the trends from World Bank. And unfortunately, though, today only 1/3 of remittances are initiated digitally, and even less so are digital end-to-end. So my father, he is an immigrant, and like many others who arrived in this country, he only had $100 in his pocket. And decades later, he continues to send money to his mother, who lives in a remote village in Bangladesh, and then she goes and cashes it out for everyday use. Well, cashing it out, that adds overall costs and tends to be borne by everybody. Expanding digital receipt is crucial, but it's not easy because the receiver needs to be able to receive those funds in a method that they can spend for everyday use in their communities. And this requires technological infrastructure, technical literacy that may not be accessible to all. And so when you also consider potential for a widely adopted central bank digital currency or a CBDC, that can be a big deal. But first of all, it requires penetration of the CBDC infrastructure in remote or rural areas to reach that last mile that I just described. It needs to be able to handle offline transactions. There has to be digital education, and all of these are dimensions that need to be considered. So I want to make an important point that the private sector is continuing to innovate, even in the absence of CBDCs. So mobile money is an increasingly important way to send remittances, but mobile money isn't always accepted at merchants or online, so that cash out problem still exists. Last summer, Visa and Safari.com announced a partnership where inside the M-Pesa wallet, and for those who may not be familiar with M-Pesa, this was a mobile transfer remittance initiative launched in Kenya. And today you can create a virtual global pay Visa card within that M-Pesa wallet to be able to spend the mobile money anywhere Visa is accepted, whether it's in Kenya or across any of the 200 jurisdictions where Visa is available. So, and talking about CBDC though, and particularly financial inclusion, it can help with remittances, and especially on the receiving end though, there needs to be broad adoption and acceptance. And to achieve that, it requires enabling CBDC to work with existing and nearly ubiquitous payment network. And so I have colleagues at Visa who are exploring these issues, including something called the Visa CBDC payment module. So more to come on that front.
Thank you. Thank you,
Ananya,
yeah,
may I compliment?
Of course, go ahead.
Thank you. I like a lot what Nasreen was saying. I think this issue of remittances and high cash usage in many jurisdictions touches upon two points. First, how to digitalize domestic payments. CBDC could be an option for many jurisdictions. Mobile money or other fintech providers can do that too, as we've seen in Africa or other regions as well. But the question is, how would those providers, those private sector providers, or those retail CBDCs could link into other countries? How your father can access some solution that would integrate seamlessly, safely, and in a cheap way to the village in Bangladesh. So in the middle, you'll have to have intermediaries being able to hold settlement assets in two currencies. Those may not be the same retail CBDCs that we've seen being developed in many countries, maybe wholesale CBDCs, and these need to be available for intermediaries to be able to hold both and to convert one to another in a cheap way. So this combines many issues. So the cash usage in Bangladesh, in the village, the retail use, the retail money, the domestic payment system, and how actors in those domestic payment systems can interact with other domestic payment systems. So in a cheap way and in an efficient way. So competition is going to be very important there. So how we develop systems that are open to this new fintech, this new mobile money, to be able to access a settlement asset that links and can be converted cheaply to US money. So your father can send that. So I think that's where the public-private partnership plays an important role in breaking walled gardens, in ensuring competition. And even the small players have a role, even if they're not going to be systemic, but they play a role in reaching those hard-to-get users that rely on cash. And that has a big impact in many of our, in the IMF membership.
Yeah, thank you, Federico. And really important points there, an opportunity for public-private collaboration. But really, Nasreen, what I was thinking about when you're talking about your father is that when you have $100, it's really hard to get a bank account in any country around the world. So there needs to be a version of digital onboarding that allows for more people to come in. And that's what financial inclusion and access is going to be about. And it's an opportunity for innovation there as well. It's related to the payment space, but at least a little bit removed. So we have a little bit of time now for final thoughts really quick. And this is a future-oriented panel where we've titled it Next Generation. So I really want to ask you guys, what's next? What do you think we should be focusing on? What do commercial banks and central banks think about going forward? Jesse, if I can start from you here.
Yeah, I mean, I think what I'll say is to echo a point that has been made by many, and Federico, I think, perhaps put the most focused point on it, investments in new technologies and new infrastructures can fundamentally act as a catalyst for us to rethink the way in which we work together, to explore fundamentally new efficiencies that can deliver cross-border payments that are by orders of magnitude more efficient, faster, as well as providing at least the same, if not higher, levels of security and compliance. But, and I'll sound like a broken record here, the underlying mechanisms of driving that forward are going to rely on public-private collaboration that's focused on alignment around regulatory frameworks. I think critically, something that is underrepresented in a lot of the discussions that we're having, alignment of data protection and privacy frameworks, which can often create significant impediments to straight-through processing, and public sector investments in things like opening up RTGS operating hours. And I think that we really need to avoid believing that technology can fundamentally act as a panacea in this space. I know that one of the questions sort of in the Q&A sort of has asked the question about, couldn't blockchain be critical to us sort of aligning on new standards and practices? And I'll be frank, and this may be a bit of a controversial position, but I think that's a fundamental misunderstanding of what blockchain as a technology is able to do. Blockchain as a technology is really great at keeping a decentralized group of parties on the same page in terms of having a golden record for effectively an agreed upon record of what a ledger looks like. But it does not inherently as a technology make it easier for a community to convene around a common standard. And that's why you've seen, for example, a lot of work being done thinking about couldn't blockchain be the key to us standardizing and driving efficiencies in the complex and often manual world of trade finance? And we saw some highly publicized work by Maersk and others looking to convene communities around blockchain solutions. But ultimately, we've seen Maersk's work in that space recently abandoned for the very reason that even though that technology was able to keep all of the participants on the same page, it wasn't able to convene around that platform a sufficiently large portion of the trade finance community. And so when we think about cross-border payments, we need to keep in mind that alignment of standards, practices, and regulations can't be delivered by technology. Instead, it is a critical enabler and catalyst to the potential that technology brings to the table. And without engagement on those public-private issues, we simply won't be able to unlock the potential of blockchain or any other technology.
Thanks, Jesse. Nick, if I can ask you to weigh in next.
Yes, I mean, I do agree that the standards has a critical role to play in this space. We will see in March the cross-border introduction of a new messaging standard in the form of ISO 20022 and entering into the period of coexistence that will take us towards the use of that standard across the world. And the ISO 20022 opens up the ability to carry richer structured data. And like all data innovations, there will be lots of opportunities to create additional value and services as a result of that. So I think standards has a very important role to play. And I think we're at the cusp of that new standard enabling us to move to a next level. The second thing I wanted to leave the audience with is really around central banks and private sectors looking at the development of CBDCs. Most of those initiatives are rightly taking place at a domestic level because the CBDC has to work for national policymakers and national financial communities. Equally, though, I think it's vital that those policymakers think about interoperability and designing in interoperability from the get-go to ensure that the financial system can become ever more integrated, and the cross-border payments can become more instant, more frictionless as a result. I hope that we can, that CBDCs can be used as a catalyst towards that. And, at SWIFT, we stand ready and are working with the financial community to take that effort forward. So, yeah, interoperability key to the future here.
Thank you, Nick. Nasreen, please go ahead.
Sure. So I would echo and build on what Jesse said, and to an element, Nick as well, that technology is certainly an enabler. It's a facilitator, but more importantly, an area that both the private and public sector needs to consider is the implementation of requirements, namely around anti-money laundering and counter-financing of terrorism. And alongside that, the bottlenecks in data flow, which is a key cost driver in cross-border payments ecosystem. And let me explain quickly what I mean by that, because one of the fundamental problems that hasn't always gotten a lot of attention these days, because we often talk about remittances or other issues more on the retail side, but it's also on the wholesale, where I've experienced some of these challenges with my payments technology background in the business-to-business space, where if you have a company in the US sending a payment to a supplier in Africa, it can take days, because as the payment moves from bank to bank, the information is typically verified with all the different jurisdictions' requirements, and depending on the infrastructure and the plumbing of the payment system, some of that data can even be dropped. And then it requires further review, manual intervention. You have different formats. And I've done a lot of work around mapping and ISO 20022. According to a business at OECD and IFAC study, regulatory fragmentation costs the global economy $780 billion a year. So it's in this backdrop, I'm very excited to share that last December, Visa announced it's going to be investing $1 billion in the next 5 years on digital transformation in Africa as a step towards advancing digital payments and enhancing cross-border data free flows. But to truly achieve success, and Jesse's hammered this over and over again, it requires public and private sector commitment, coordination, and cooperation across jurisdictions in alignment of regulatory and data standard frameworks.
Thank you, Nasreen. Federico, please go ahead.
So I'm in the hard spot of, because all of what has been said, I think it was very valuable. So let me add two points. One, I think that I'm going to have a bit of controversial point relative to Nick. I think that interoperability may not be something that is achievable for retail CBDCs. Each jurisdictions, we see it, they want to develop something that works for their problems, for their own policy objectives, their own frictions. So it's likely, I think, that if we're going to build something that is interoperable, it has to be developed for cross-border payments, maybe wholesale CBDC type of arrangement. For this, as it was said, data frameworks are very complicated. Regulatory issues are complicated. And at the end of the day, part of it, it's due to, we just need to revamp frameworks or revamp the ways that we do business. But also, we need to find ways to trust the new systems. This is hard because many countries do not inherently trust to each other. Some are closer, some are farther in geography or politics. So I think the core channel, the core challenge is to find solutions that are flexible enough so they can be adopted and can put countries and governments and the public sector at ease in terms of what they are delegating to these new supranational solutions, but also that are useful and bring value to cross-border payments in terms of improving competition, improving efficiency, and improving safety.
Thank you, Federico. Really important point there. When I define my area of research, I say it's about the future of money. And as much as it is about technology, it is more about how to create systems of trust, more so than about technology on a day-to-day basis. But thank you for those comments. I'm going to move
if Federico, if I may just say very briefly, we're happy to take on that interoperability challenge, and let's see where we can get to.
Some healthy rivalry there. I'm happy to see it, but I'm going to move to at least one audience Q&A, which I think is a really important one, and something we've alluded to before, which is what happens to inequality between emerging economies and developing economies as systems digitize. And if I can provide my perspective there, some of the most exciting innovations I see come from emerging economies. I'm thinking about Brazil's PIX, I'm thinking about India's UPI, a lot to be worked on there, but really exciting ways of innovating on payment systems. So I'll open this to Federico first, because he talks to his member countries about this a lot.
Thank you.
Sure.
No, I fully agree. So I'm a fan of India. I'm a fan of Brazil, of all that they've done, and many other countries. I think that the big challenge is on how to create new systems, domestic systems in this case, that are open, are safe, and can entice innovation. So, for instance, Brazil, how many participants PIX have? I mean, just back up top of my head, the order of 700. So that's a lot. And some are big banks that have a large market share, but some are very small fintechs that can access particular parts of the population, and they have an impact. So costs of payments have come down a lot, cash usage has come down, and that has an impact also on the safety and the way that people can do business, even the access to credit down the line. So developing systems that are open for competition and can have a rich ecosystem and with different players that fill in different gaps, it's absolutely essential.
Thank you, Federico. I'm going to move to another question that got asked a lot, which was about privacy and cybersecurity. Jesse, if I can turn to you, and if you could shed light on what the role of privacy and cybersecurity is in the next generation of innovation. How do we enhance these?
So I think it's really interesting, because I think this is an area in which we see a lot of tension right now. I think there's broad agreement that there's obviously a need, and I'll focus particularly on the privacy and data protection element here. There's obviously a need to ensure high levels of data protection and privacy, and there's fundamentally an investment on the part of countries in protecting their citizens in this space. But that very noble goal is unfortunately, by virtue of the different ways in which the protection of individual privacy is being pursued in different areas, is creating new and rising tensions in cross-border payments. So if you look at the areas in which there is an appetite for operational harmonization and regulatory harmonization in the G20 roadmap, we're moving, not always as fast as we would like, but we're moving in the right direction on most of those. We're harmonizing messaging around ISO 20022. We're expanding the use of harmonized APIs. We're harmonizing through the FATF process, the AML and CFT regulations in this space. But the area I would say in which we're going in exactly the opposite direction is the fact that we are creating in countries around the world totally heterogeneous and non-interoperable systems of data protection and privacy regulation. And the result is that you'll end up in a situation where in one jurisdiction, the provision of a tax ID, for example, is an absolute requirement to make any transaction of any meaningful size. And in another jurisdiction, the tax ID is considered to be a very secretive and really important piece of PII, that there are a number of restrictions around having that data transferred at all or to leave the country, right? And it's not to say that either one of those approaches is good or bad, but to say that when you try and put them together for a cross-jurisdictional payment, you end up with a lot of complexity. And so this is why I think it's really important for us to be thinking about how things like the GDPR system for binding data transfers or the APEX system for cross-border data rules that seek to establish harmonization between these data protection and privacy frameworks while allowing countries to pursue that essential goal of protecting privacy is really absolutely an essential, and I think to date, a largely overlooked element of driving improvements in the efficiency, cost, and trust of cross-border payments.
Thank you, Jesse, and that's all the questions we're going to take. Really important issue here of data privacy and cybersecurity. If I can plug our work a little bit, we've been working on the issue of privacy quite a bit. We wrote 2 papers last year, one on how do we harmonize jurisdictions, US and Europe specifically when it comes to CBDC provision, especially on the wholesale side, and the other on privacy and cybersecurity. Why do we view them as trade-offs against each other? We actually found that privacy enhancing software is often also the most cybersecure software that we can use. But I am so glad that you were able to join us. Thank you for shedding light on some very important issues regarding payments. We've talked about a lot today. We've talked most importantly about interoperability, jurisdictional implementation issues, the role of DLT blockchain, the role of technology and how to view technology in general. And what I've seen today is that there's emerging consensus on some of these issues, and some are controversial and seek more answers than we can provide, at least on this, but provide a great agenda for us at the Geoeconomic Center to work on for the rest of the year. So there's a lot more to come, and please follow our work on our website and our social media platforms as well. Thank you to the panelists, and thank you to the audience for joining us today. Have a great day.